as people referring us business, they really like this one program, this $150,000 loan. It's in essence, it's unsecured, uh, a 10-year term. The interest rates are prime plus 2 3/4. And it's a really so what are the basic requirements and how all that works? So the purpose of this video is to go over that with you. And so let's go over the program real quick. So minimum loan $20,000 to $150,000, 10-year term. So so like Patriots export, like sometimes the interest rates are a little higher for export loans, like if you're doing loans out of the country. But the most people are either doing a Patriot Express or this SLA, which just means it's just a regular SBA loan. But so depending on if you're going over 51,000, is prime plus 2 3/4. And typically we charge um our loans are kind of charged based on the amount of work. Sometimes we'll just charge like five points under 50,000, 4 points under 100,000, and 3 points under 150,000. And one of the things that under SBA guidelines, you got to document if you charge anything over $250,000. And one of the things that we do is also offer the business credit builder program along with that. And if we're doing like financial projections, business plan, and that kind of stuff, in order to get the loan done, they charge for all of those items as well, that they'll have to sign off on. But that's how we're able to. Now this loan is a working capital loan, so typically, this is not a loan you use to buy a building with, or even buy a business. It's really not for that. I mean, we have other programs for that, but it's you can read it here. But this is not for buying investment property, that kind of thing. We have other loans that we have for that, but you can read through this, and it goes. So what are the basic requirements of this loan here? So the basic requirements. So this is one of the programs that you can actually use as a startup. So one of the things, ideally, you have to have borrowed before the amount requested, and that kind of be like a mortgage or a car note. Like if you've only borrowed in your life only 25 grand and you're trying to get $150,000 loan, they're not going to approve that, more than likely. And then also what they're looking at is family income that's available to carry the personal expenses, plus ideally the note. So what that means is, let's just say the individuals are borrowing them funds are married, and one of the spouses actually makes a decent income, and the other one is applying for this loan. They want to make sure that this startup is not solely dependent on how this business would do. So typically, like to see they have some funds set aside. And I have another lender that may look at that if it's really strong and a lot of mitigating circumstances. But under this program, hey, you need to be able to show I'm saying 680 or better. So if you look here, there's like a combined FICO score and business credit score. And like I said, we have a business credit builder program that has been helping companies. So you got personal credit and then business credit, and then together they have a score that they use internally for that. So typically they also want to, so what I've typically seen historically is that there's been a 680 credit score or better in order to qualify for that program. 6 months cash available to pay the note. So like you need to have some liquidity and need to also have 10% in cash available at the time applying the loan, as well as any cash necessary to close the loan. Like just got to be 10% liquidity plus closing costs. And what are the closing costs? They're pretty low. It's like typically the packaging fee and so forth, which is on there. It's like $2,500 that the lender charges and so forth. So that's what you're looking at a startup. Now the existing business, you got to have you can't have a losses, a bunch of losses, and be able to qualify for a loan like this. That they'll be like, well, how are you going to be able to support the debt if you haven't in the past been able to do well in the business? I'm saying a 650 or better credit score, because sometimes at that time you maybe have a business credit profile, and that'll kind of even that out so that you have a 100 uh, 165 micro score. So one of the processes that we use is we call it a business fund analysis. And what that is so let's just say you're a part of an association. Well, this association, you can go to it, SBFE.org. It's a bunch of lenders. You can see like American Express, Bank of America, Capital One, some big banks, PNC, Truist, Wells Fargo. And then here. Now, I don't just send this. I mean, hopefully, they'll build some credibility with you. But the main reason I'm showing this to you is, as a member of this organization, what happens is all the lenders, we all come on in as an associate. The purpose of an association is to figure out best practices in your industry. Well, as lenders, we come together and figure out what are the best lending practices. And one of the cool things that has been done is when we go to these association meetings, a lot of the lenders will share their best lending practices. So one of the things that we had done is we put together what we call a business fund analysis. So it's like equivalent to if you were going, I don't know, going to the doctor, let's just say, and the doctor is going to prescribe some medication. One of the things that they're going to do is make a determination. Maybe check your blood and get some other fluid, check your weight, height, all those kind of things, and making an assessment on before they prescribe medication on what you would need. And similar to us, so like we compile information from all these lenders, their best practices, lending practices, and we put it into our own proprietary system that we call a business fund analysis. So BFA for short. And so we have a process where when we take all the information, we put all the information in our proprietary system, and then we spit it out, the input, to make a determination on if the borrower is going to qualify or not. And so 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 it's kind of hard a lot of times when people ask you what all the requirements are. Well, we'll ask some basic questions to see if it's even worth taking the time. We call it our corporate need analysis when you call us. But like if you're kind of referring business to us and trying to figure out um over time, it just you'll just kind of learn. But like it's just best to set us and let us they invest in the business fund analysis. We'll check some basic information from the tax returns, financials, credit report, so forth. There's also, like some industries do better, like for example, than others, like obviously restaurants and so forth during the pandemic we hit hard. So a lot of times, the bank will look at those a little harder than, like in other industries. And so hopefully what this video will help you in figuring out how to do it. But the best thing I can just say is, I mean, without us doing the business fund analysis, is really difficult for us to, kind of, instead of just piecemeal, you gotta just you send it. And then if we have other programs that, let's say they don't qualify for that program, then we can put them in other programs. Let's say maybe they don't qualify for the 10-year term, maybe a 5-tiered term loan or something like that, that with a lesser requirement, credit score, and so forth. So hopefully that will help you uh, kind of explain a little better what you know how everything works. And I appreciate you taking the time to watch this video. Thank you.